Hello everyone and a very warm welcome to today's stock markets update for Friday, March the 21st, 2025. It is still a bit of smoke and mirrors out there. We're not really yet entirely certain what the intermediate to long-term intentions are of the market. Let's rephrase that, more the intermediate term intentions of the market, but things are starting to clear up a little bit with today's price action, and today's webcast will be very brief and short. We'll just go over the price charts of the stock markets. So let's go straight to the charts. I'm going to start here with the Dow Jones, and we have a potential red wave 4 here in place, and the current advance has been a bit sloppy. So red wave 4 is most likely in place as long as we hold, of course, above last Thursday's low at 40,661. Now it does look like 5 waves up on the smaller time frame. Let me show you that. 1, 2, 3, 4, 5. And then we could have had a irregular flat wave B2. So we have potential for a A1 and a B2. Now remember, we've had this 1, 2, 3, 4, and 5 setup on the chart. We just don't know how this wave 1 is going to materialize. It can become a leading diagonal. In a leading diagonal, we get a bit of a overlap like this. Okay, in the impulse, you want to see it like this. But in the leading diagonal, we get a bit of overlap like this. And technically, everything is 3 waves. So something like this. So it's going to be kind of like messy. All right. That's what we're potentially tracking. And if we can hold, of course, above last Thursday's low with a first warning below today's open at 41,763, a second warning below 41,443, which is today's low. A third warning below last Friday's low at 49,29. As long as we can hold above these levels, we are going to look higher with a breakout above yesterday's high at about 42,225 as a confirmation, with then a C/3 target zone for wave 1, or only a bounce to about 43,000. 43,500. All right, so you can see here this target zone right here. Right, this is kind of what we're looking for. And you can see the gray C3 gray. I have to make sure I'm saying the right color, as we is then in line with the green wave 1 target zone. Okay, and a leading diagonal will be overlapping. Okay, so this is what we're going to look for. Of course, we need to break above Thursday's high at about 42,225-ish, I believe it is, somewhere around there. And we have to hold above these levels. But this looks good. The last 3 days show, in my humble opinion, more buying because we have had these nice candles there. These are pretty good candles. So overall, this looks good. And here we have it. This is what we're going to look. So that's why I said it's still smoke and mirrors, because of course Monday, Tuesday, Wednesday, Thursday, this whole week is a little bit overlapping, up, down, up, down, up. It's a little overlapping, so it's a little bit smoke and mirrors of the true intention. But I think we can go higher. Things start to look good. Look here at the MACD, for example. It's now on a buy. This is the first buy cross that we've had since the decline started. All right, that's a positive sign. Here we had a buy cross, for example. Here we had a buy cross. Here we had a crossover that was a buy. And you can see every time led to a good outcome. Okay, the RSI 5 is back above 50, which shows relative strength. All right, and of course we broke above this downtrend line, which is also good. If we look lower to money, money starts to flow back into this stock market. It's green. Okay, and it hasn't been really flowing out all that much, so nothing too bad, too serious just yet. So our preference is for higher prices, contingent on holding above these warning levels. Let's zoom in on the NASDAQ 100. This is the hourly chart. Well, technically 65 minutes. Each bar is 65 minutes. And also here, we think we have a nice wave A1, an ABC for wave 2, and we should now be in this wave C/3. Okay. That is our preferred wave count. Then B/2 was, in this case, I would say a flat. All right, A, B, C. And we should now be in this C3, which can target anywhere between about 20,100 and 20,800 ideally. I know that's a huge target zone, but that is because we don't know if we're going to get a C is A relationship, or C3 of course, or if we see it 1.62 times A. I don't know. Okay, that is the question. To be determined. We cannot predict the future. So this is our target zone. And once we get more price data, we should be able to look higher. So you can really see, of course, today's low needs to hold, right? And that is similar to earlier this week's low. And of course, we need to hold above last Thursday's low, right? And that then means it's either going to be this larger B wave bounce. So I'm not going to go too much into detail. So we get something like this, and then 5 waves lower for C, or we're in the starting gates of the new bull. Again, even a 3-wave advance can still start this wave 5 for some sort of diagonal. 3 up, 3 down, right? 3 up, something like that. 3 down, 3 up, right? Something like that. So we can still advance. So then we had here a ending diagonal, right? Because that's a 5th wave. 5th waves can be ending diagonals. And then this 5th wave will be a ending diagonal. Can all be ending diagonals, one string after each other, since we are now wrapping up the final 4th and 5th waves of this rally that started all the way back, at least in 2022, and most likely all the way back in 2020. So don't be surprised if we see again a lot of overlap, all right? Just like we saw here. This looked more like a diagonal, and this can also become a diagonal. I don't know. I could really not tell you. I hope not. So these are still the two alternatives. And this week, of course, with such a plus 25% gain, tells us nothing about which of these two paths the market will take. Again, a drop down to 18,000 is quite okay. A, C, and then 5. It's quite okay. All right, it would not hurt the bull's case. And then, of course, if we see such a big drop, then we're going to place the final wave 5 underway to ideally about 26,500. Okay, if we don't, and we start seeing a impulse higher, at least 5 waves up, we're going to also look somewhere around 25,000 plus or minus 1,000 for a wave 5. Okay, that's really the two main paths, and that's why it's still a bit smoke and mirrors, because there's too little price information to know if we are going to see 5 waves up. So 1, 2, 3, 4, 5, right? To be determined. I don't know yet. I don't know if we're going to get a 4 and a 5, or if we're only going to see 3 waves up into this target zone, and I don't know if we're going to get C is A or C is 1.618. To be determined, but contingent on holding, I would say, today's low, we're going to look higher. Similar for the S&P 500, starting with the hourly chart. This looks a little more constructive than tech. I think tech is still in the doldrums, but maybe it's going to play catch up. Then we have, this should be wave A. So then this is wave A, B, C, for wave B, and now in this C3. Anywhere to 57.60 to about 59.50. I know it's a huge range. That's almost 300 points. Once again, it depends on if we see a C is A, or if we see C is 1.618 times A. Okay, that we just don't know yet. To be determined. We need, of course, to break out above 5,700 to really start triggering this. With, I would say, 57.60 really the minimum, and I would say 59.50 a little bit more logical target. Okay, that I think is then right here in this resistance zone at around 58.60. And then we'll see if we get 4 and 5 up. If we do see 4 and 5, right, a 4 and then a 5, then I'm all in the camp of the wave, red wave 4 is completed. Okay, if not, and we see a clear 3-wave advance, most likely it's going to be a bounce. We're probably going to drop all the way to 5,100, and then we rally to 7,100, 7,700. Okay, that's the two options we still have. To be determined. I cannot know for sure yet. Again, it's still smoke and mirrors, because this price data here is of course way too little to say anything about what the price is going to do further out. So are we going to see 3 up and then a 4 and a 5? That would be great. If so, then we get a pullback and another leg higher, of course. If we only see 3 up and we start breaking below key levels, right? Then, of course, we have to say, all right, that was just a dead cat bounce, and we're going to go to that 5,100 level, right, before we're going to move back up again. So those remain our two options. Moving on to the semiconductors. Again, here it's also smoke and mirrors in the sense of, are we in a wave 5 lower, or was this a impulse? It looks a little bit impulsive. 1, 2, 3, 4, 5. Okay, so the bears would want to hold below 47.24. If we go above it, which is pretty much very close to, I would say, Wednesday's high. If we go above 47.24, then I think we're in this nice rally to 5,700. Now, if we start breaking below today's low, and of course this low here and this low here, then we're going to look for this wave 5. So we're not sure yet. We have topped here in this ideal wave 4 target zone. So technically, yes, we can still see this, okay? This potential remains here on the chart. However, if we break above Wednesday's high, it gets less and less likely, because then this potential green wave 4 is getting, in my humble opinion, of course, too long in the tooth. And if we get above 47.76, this potential wave 1, we will not see a 4-5 setup, because 4 and 1 are not allowed to overlap in the impulse. All we got then was 3 waves lower, and we're going to look here for 5,700. Okay, so far so good. However, once again, it does look better as a impulse. 1, 2, 3, 4, and a marginally higher high for 5. We should now be then in a wave B/2. This was then A/1, and should see another leg higher for C/3. Okay, that's what we're looking for. That's the preferred wave count. So still a little bit smoke and mirrors. The intention is still a bit unclear about the market, if it wants 4 and 5 or not. It depends on what information is going to become available over the next few days, over the weekend, etc., for the market to decide if it wants to do the 4-5 setup, yes or no. I don't know yet. These are the two potentials. So not yet a great, clean, clear trade setup. I think the trade setup will be much clearer if we get above 47.76. Okay, that would be a very nice long entry, in my humble opinion. And of course, if we break below about 4,400, it really starts to suggest we're going to go to the low 4,000s. That's also a much better trade setup. Currently, this is still a bit unclear, though we have some idea of what we can expect if we see breakdowns or breakouts. Similar for the IWM, has so far topped in this ideal wave 4 target zone. So now we can let the market decide if it wants to do 5 waves lower. Remember, if we see 5 waves lower, I'm going to put a fork in this market, and then we have topped a long term for this large wave 5. And if we see this, then I expect a big bounce, probably back to about 220, something like that, before we see another massive decline. Because if we see 5 waves lower, then this is A/1. Okay, and then we see wave B/2, of course. And after B/2, we'll get wave C/3. Way lower than at about 175. It's going to drop hard. So that would be devastating, but it is very possible. So now the market can decide if it wants to do 5 waves lower or not. All right. It's do or die time. If we do see 5 waves lower, once again, stick a fork in it. All we're going to see is a bounce, and then rapidly lower for a C wave after that. If not, then we start trending higher from current levels, and we start breaking above, I would say, 210 and especially 216, then I'm going to look for that 253 level. Okay, that's really where things are at. I wish things had cleared up a bit this week, but I think I warned everybody that the next few days to weeks will probably be a little bit unclear on what exactly the intentions are from the market, and so far it's done exactly that by topping in this potential wave 4 target zone. Okay, that's why I have a question mark, and that's why we have a question mark. We don't know yet, but we'll know if we start breaking lower. Anything below last Thursday's low, right, somewhere around 196.5, 197, and we're going to look here for the low to mid 180s. And then we're going to look higher, and then we're going to look lower. We start going above 210, and especially 216. I think we can go to 253. Okay, that potential still remains there. Those are the charts I wanted to share. Nothing more, nothing less. So it's still a bit smoke and mirrors out there. Things are starting to clear up a little bit. If we can break above this week's highs, we're going to look for our target zones to be reached for the wave 1 and then a pullback for wave 2. Bigger picture wise, we still don't know yet if we're going to see a larger ABC, for example, for the NASDAQ 100 and the S&P 500 and then move higher, or if we are all done with the wave 4. We don't know yet. We've technically done enough, at a minimum done enough, so to say, for this potential wave 4. So intermediate term, still smoke and mirrors. Things are clearing up a little bit. I'd like to see a little more price information over the next few trading days. And we prefer to look higher, contingent on holding above last week's low. And then the market can decide if it just wants to do a bounce and another leg lower. Take care, trade safe, and have a great rest of your week.